What is up, guys? Zach Ginn here, and in today's video, we're going to talk about one of the most anticipated topics that nobody really likes talking about. People don't get in the mud and in the weed of things here, but this is what we do here. So I'm going to be talking about wholesaling, taxes, asset protection, basically how to set up a business for wholesaling. Should it be an LLC? Should you not? How taxes work? I want to explain the in and outs of the stuff that nobody talks about in this business of, how these taxes are working, what's the liability. This might seem boring for a lot of people, but this is the stuff nobody talks about. And this is the stuff I have to live and breathe every single day in my business. And really want to explain exactly how taxes work for wholesaling real estate, how tax structures work so you can save the most money. Guys, I'm excited for this one. Not a lot of people in this world are excited to talk about taxes, and I'm usually not the biggest, most excited person about taxes, but if we're going to combine wholesaling in it, I'm going to get pretty excited because I love wholesaling. This is part of the wholesaling real estate business, and this is definitely something I think a lot of people should be looking at and something that could help change them and help them become a better wholesaler. So, guys, I'm excited for this one. I'm going to share it. I'm excited to share the exact blueprint of how to pay the least amount in taxes. We're going to talk about everything today for wholesaling real estate. But guys, if you want to get this information, this is like talking to a person for taxes for, $1,000 consultation. I give absolutely for free because I'm not a tax attorney or anything, but I'll give you my experience with it absolutely for free. Just do me a favor, smash that like button and hit that subscribe bell and subscribe, hit that bell, get notified, and we will break down exactly how to actually do your taxes for wholesaling, how taxes work, and everything like that. I'm jacked up. I'm ready to go. I'm ready to share with you exactly how to get it going for it. So, guys, if you're ready, let's get it going. Let's cue the intro. Woo!
Get the fuck out of bed, bitch. Go. Get up and get the guy go. Time to wake up, bitch, get up. Get up. Get up.
Let's get it, guys. I love it. Let's get it. Woo! What's up, Jaden, Justin, Jeremy, One Ton Patriot, Nick, Richard? What is up, everybody? I'm excited to break this down today. I'm excited to share with you exactly how to get it going. So, guys, if you are ready, smash that like button and subscribe, and let's get into it. Let's get in the nitty gritty of this. Let's break down this part of the business that nobody likes to talk about because I'm ready to go. I'm excited to share exactly how to do it. What you should be doing and everything. So before I get into it, I have to say this, the least exciting part of the video, but I will have to tell you guys, I am proudly not a realtor. I am not a lawyer, CPA, financial advisor, none of this stuff. I was just a 17-year-old kid that learned wholesaling real estate. And basically, I went full-time to wholesaling ever since I was in high school. Now, yeah, I have a bachelor's degree and I took accounting classes and I got A's in all those classes, but just because I have an eidetic memory, like I really didn't learn too much. I'll tell you this: the college, like I went to, I didn't really learn accounting too well. Of course, I took all these classes for it. Didn't learn really anything, finance, all that fun jazz. Didn't really learn anything too practical for it. This is all the tax information I learned from actually running a business for 5+ years. I did my own taxes for 3+ years. In years where I was making like $500K a year, 300, 100. So I feel like I'm pretty qualified in a wholesaling sense to talk about this, but not in an advisement special part. This is going to be sort of the part where I'll tell you what I recommend for wholesaling, but just understand I am not this tax professional person. This is not consulting advice. This is all Per what my lawyer tells me to say, this is for entertainment purposes only. So if you guys are ready to go and get it going, let's break it down. So let's break down the top part here. Taxes. The only thing that are guaranteed in life is death and taxes. And we're not going to be talking about the former, or we'll be talking about the latter. So we'll be talking about taxes today for wholesaling. So basically, if you don't know what taxes are, it's basically a portion of your income you'll have to pay to the government. We can cry all we want. We're going to have to pay our taxes. There's ways to get around paying taxes, things like that. But most people are going to have to pay taxes. And the unfortunate truth is someone will tell you off the bat, oh, I make $50 million a year and I pay zero taxes because I'm the smart person. I'm not going to break into the theory of accelerated depreciation, depreciating things, because you're just kicking the can down the road. You will be paying those taxes one day, especially when you recoup that. So you will be paying taxes. I love when people tell me that, oh, I pay zero taxes because I do rapid depreciation, all these strategies. That's great. See you next decade. You're going to have to pay your taxes. So I'm telling you right now, we're all going to have to pay taxes. I want to show you exactly how they work for wholesaling and how to pay the least amount of taxes and tax structure stuff. I know it's not fun, but what I'm telling you is the information I'm going to give you. And for most wholesalers, I'm going to give you some information that'll probably save you, I don't know, 20, 30K if you know how to do it right, or something you can give to your tax accountant if you have one in the future, because accountants miss a lot of stuff. I'm telling you right now, they miss a lot of stuff that's very interesting. I don't know why they miss them, but some of them do. So this is just good general knowledge for you to know. So let's kind of break down the types of taxes we'll talk about in wholesaling, just so you have the best understanding of it. The reason why I like saying this is so you understand what's going on with your money, exactly how to sort of explain taxes to your sellers too. So this is kind of a knowledge part two, where you can explain to your sellers how taxes are going to work also. That's actually going to help you out too. So what are the type of taxes that you as a real estate wholesaler have to pay? First of all, we got federal income tax. Boo, right? Like, no one's a big fan of paying tax. I'm just going to explain it. So federal income tax for wholesaling real estate, we will have to pay that. For certain states, you're going to have to pay state income tax. So we'll break down a chart exactly who has state income tax, who doesn't. We're going to break down all the charts today on it. Just understand, especially for taxes though, for wholesaling real estate, this is not wholesaling subject to creative. This is wholesaling real estate, selling contracts via assignment of contract for a profit. That is income. Let me say this one more time. When you assign a deal, so you put a property under contract for $100,000, you sell that to a cash buyer for $120,000, and then the cash buyer gives $100,000 to the seller, $20,000 to you, basically through a title company. We get a $20,000 check in the mail. Oh, that's great. You know, we all love flexing the check and blah, blah, great. We got it wired in. That is income. So the thing we have to understand is the type of tax entity you have, LLC, S Corp, C Corp, all of these, the way that you write a contract, it's not just for paying taxes, also for protecting the liability stuff. So just understanding the way you make money. So for $20,000, there's certain ways we can wash that through, and I'll show you exactly the ramifications of each one. Because if you have a S Corp versus a C Corp, that $20,000 is going to be taxed differently. And depending on how much money you make, you could probably save money with an LLC, or you could save money with a C corporation. I want to break down exactly how they work so you understand the income levels you can guesstimate for the year, so you know how to pay the least in taxes. So I'm telling you, if you know how to do this right, and sort of the way I explain it, probably save 10K this year. That's sort of what I can calculate. So also understand how property taxes work. This is something you can talk to the seller about. And this isn't for wholesaling real estate. This isn't technically in it, but I wanted to add that in there just so you understand that as a wholesaler, because you're going to talk to a seller that is behind on property taxes, and they're going to ask you questions. And if you don't know the answer, probably another wholesaler is going to know the answer, and you're going to look bad. So I don't want you to look bad. I want you to be as informed as possible. So property taxes work is when you own a piece of real estate. Again, this is not wholesaling related, but when you own a piece of real estate, the property assesses the value on that, usually lower than the real value in most municipalities and counties, and you'll have to pay a portion of that assessed value, a percentage of it, in property taxes. This funds the police, firefighters, schools, teachers, roads, etc. It'll probably pay for the county and the city and then the local government, right? Um, there is sometimes city tax I've seen in like huge cities like New York City, for example. But we're not going to break that down either. But that would be paid in a certain entity. So property taxes, you will have to pay property taxes if you own a piece of real estate. Unfortunately, there's homestead exemptions in certain states that are pretty interesting, but pretty much that's how property taxes work. Remember, guys, I am a wholesaler, so I can give you the general best answers I can on it. But if you have any other questions, you just comment them below. This is a live video, obviously, and I would love to go help you out and answer it. So let's talk about another reason why I'm talking about this is kind of a liability part. So in the unnecessary part, or in the part that no one talks about real estate wholesaling, is when you sign a contract. Again, wholesaling real estate, we are in the business of selling contracts, right? So I see a Mr. Seller and I sign that contract and then I sign it. I sell that contract to somebody else. This is all like, I hate to say this, but like this took me like a solid couple months to learn this in wholesaling. But like when you sign a contract, this is like big boy adult stuff. Okay. Like when I was 17, 18, like you might think of it like, oh, this is just like a fun little side hustle game. When you legally write a legally binding and enforceable contract, you have to write one so you're able to assign it. The thing is, this is like big boy stuff. Like this is legal stuff. This could be a tort lawsuit if you do it wrong. Like wholesaling real estate, you're pretty much protected though. Like if you do it the right way, the way that I explained through freewholesaling.com, there's a extremely low chance of you getting sued unless you do something fraudulent. You do like elder abuse, like elder financial abuse. You lie to a seller, you lie to a cash buyer, you know there's termite damage, and a cash buyer asks you if there's termite damage and you say no. Like this is like, general stuff. That it's pretty common sense ethics. We already have laws in place. I'm not getting the wholesaling regulation debate, but like we already have laws in place. If you're being fraudulent to a seller or cash buyer, you're pretty much already breaking. We have enough regulations for that. So just understand when you sign a contract with a seller, you could be liable. And depending on the tax entity you get, which will affect the way you get taxed also, you could protect yourself from a lawsuit. What's a lawsuit, for example, in wholesaling? So we have inspection periods, right? So I could probably put a property on a contract. Let's use that $100,000 property example. I put on a contract for $100,000, and then somebody decides that they don't like the contract anymore and they want to get out of it. I can have that seller become liable to actually close with me, or I could cloud the title with like an affidavit of equitable interest, which will technically not be a lawsuit yet, but I potentially could sue that seller for not performing on that contract, which puts them liable. Also, if I end up outside that inspection period and I don't close, I could be liable. So that's why I think that 30, 45-day inspection period, if you got to get out of it, just a quick email, written notice or something to the seller, you'll be fine. 99.9% of sellers won't sue you if you decide not to buy the property because they probably get more money with someone else if they wanted to. So especially in this market, like you won't have a big deal. The only type of lawsuit I theoretically could think of as a legal mind would be like you put the property under contract for 90 days and the market crashes and you agree to buy it for 100 and now the house is worth 70K. They could try to sue you for $30,000 in damages because you didn't actually have the funds to close on the property yourself, or a hard money lender or a lender set up, and you were fraudulently trying to sell that contract on the entity you signed. I'm going to show you can do like a shell corporation to do it. Like if property values get a little crazy, like I have every which way to get around any of these issues, and that's where I want to talk about. So I'm ready to talk about it. I'm excited. Also be wary, guys. Like if you're making like 40K a year in wholesaling, like, and that's what you like, that's your side hustle, be very wary of these tax strategy experts. They'll charge you 5K. Like it's an insane, or like 10K for tax advice. It's like a quarter of the cost of like even your taxes. And sometimes it's not worth it. I would personally say if you're under 40K in taxes, like 40K in income for wholesaling, you could probably do a lot of those taxes yourself. Like it's probably best to save that money, use it for marketing. Now, use a tax professional. 100K, I just hire somebody. It's just easier. But it depends on your level of understanding of tax and stuff like that. So let's talk about tax entities. This is going to really affect the way that we get the income off and how reliable of things. So the first one is most popular one, I think, for wholesalers is an LLC. This is short for a limited liability company. A limited liability company is basically a tax entity where taxes are basically the same for your personal versus not. So the way I could best explain this is let's break this down to the first part. So let's do personal name real quick. So let's talk about contracts with each one, and then we'll talk about taxes. So let's break over the tax entities. We've got LLC, personal name, S corporation, and then a C corporation. Okay. These are all different type of tax entities. We can look them up, do whatever. But let's talk about contracts really quick. So if I sign a contract, you can legally do it in your legal name that Zach Ginn agrees to purchase this property from John Smith at 123 Main Street, signed Zach Ginn in his personal name. You could be liable if you do it. I think you should get at least 2 deals before you get an LLC. So a lot of people do it in their personal name. That's fine. The problem is if someone tries to sue you for something stupid, you could get sued in your personal name. And it's kind of interesting. So you got to be careful with that. So in your personal name, you could get sued if you do something there. So your personal assets you own, your house, not your house technically if it's homesteaded in certain states, but we won't get in that legal stuff today. But like, your car, money in the bank account, you could get sued for that. Now, that's why a lot of people actually have an LLC. And an LLC is if I have, Zach Home Buyers LLC, and I have personal Zach, and let's say I have 100K in my bank account in my personal name, and I have 10K in the bank account for Zach Ginn LLC or Zach Home Buyers LLC. If Zach Home Buyers LLC signs a contract and I do something stupid or something, and nothing that's like, criminal, like fraud, or like something like criminal, you're going to be fine. Now, let's say, you steal from a store and then you're like, well, Zach Home Buyers LLC stole it. Arrest the, no, you're personally broke the law. You probably get personally arrested. Okay. I'm talking for like a civil litigation or like a civil suit, right? So if Zach Home Buyers LLC knows there's termites and he doesn't disclose that, or he does something bad and he doesn't tell you there's like if there's a methane gas leak and like the cellar, gets damaged or something, not good, but understand that person, or let's say you just say there's termites and you didn't know, and there's like a bogus lawsuit that like you're the problem. And honestly, the seller, that's the issue. But let's say Zach Ginn Home Buyers LLC gets sued. You could sue me for the entire company of $10,000 in that bank account. Now, if you can prove that this was a company transaction, the wholesaling real estate, and you didn't use your personal funds to go do the marketing, you didn't use your personal funds to drive there, like you used the company card to buy the gas, stuff like that, you're going to be fine. Make sure the company buys a pen, the company pays for the printer, like if you make sure the company did everything as a corporation, that's good, because that means that they can only sue Zach Home Buyers LLC. Now, I'm not a tax professional. You could pierce the corporate veil, quote unquote, if you're going to do this to buy your personal home, right? But for most times of business transaction, they could sue Zach Home Buyers LLC for the 10 grand. That means my $100,000 I have in my personal name is protected. That's pretty cool. Also, this is good because let's say I do something stupid in my personal name. Let's say I decide to touch a piece of art that's worth $100,000 and I touch it and it bursts into flames, and the sign said "do not touch," and I signed a waiver saying I'd be personally liable if I did something at an art museum. They could sue me personally, but they can't sue Zach Home Buyers LLC unless I did like something terrible. The only instances I see where it's a personal name situation where the company gets involved or their assets get liquidated, if like a child support or something like that. You could co-sign your company for a lease or something. That's what I've seen. So yeah, that's what I've seen. That's why I get protected. Same thing with an S corporation and a C corp. These are separate corporations versus that personal name, which will help you get protected. A lot of people like having the stuff in for rentals too, so you're protected. People love that stuff. Also understand that each one has different tax delegations. So with an LLC, S corp, and C corporation, let's say I go purchase, you know, a like let's say I go and purchase, a nice briefcase for $100 to put my contracts in. Okay, something like professional, right? Or I buy a collared shirt for $50 that says Zach buys houses, or something like that. Actually, better example, I spent $100 on bandit signs, okay, and or like on direct mail, something, Zach Ginn LLC or a Zach Ginn Incorporated or a Zach Ginn Incorporated. If I spent the $100, I could write that $100 off my taxes. That's pretty cool. So let's say I made $1,000 that year, and then let's say taxes really for nice numbers before we get into it is $100, is 10%. That means I would pay 10% of that $1,000, which means I'd pay $100 in taxes. Now, the cool part of writing something off is $1,000 was what I put in revenue. I spent $100 in marketing. So that means the profit was 900. That means the profit gets taxed, not how much money I made. That's the cool part about having an LLC, an S corp, or C corp. You can write a lot of stuff off. For example, like my truck I own, I can write that truck off. I can depreciate that. It's great, right? And if I go to a house or something, I can write off the gas. It's pretty cool. So that means, especially as an entrepreneur, a lot of everyday expenses most W-2 employees have, I can write a lot of that stuff off, which is really cool, which means I just pay less taxes than the average person. So that's something I like. Cool. So that's pretty fun. Like, for example, I got a nice gaming PC here. You can see right now that this is a really nice gaming PC. I'm using that because I need the best PC possible for my live streams, right? That's pretty cool. Let's say, for example, I wanted to get into PC gaming too, and Flipith Rick wants to expand into gaming streaming. I could play video games on a computer right here that I could write off absolutely for free, which is awesome. Cool, right? So you get great uses for it. If I want to watch a Dolphins game on this background, I could literally pop up Miami Dolphins game and it's blown up. It's awesome. And I can actually write that off. Pretty cool stuff, right? Because I'm using it. This is technically for a business purpose. Awesome, right? It's great. So that's why I'm telling you, it's like it's stuff you can do, right? So understand that. Now, this doesn't give you an excuse to go buy a top of line PC for getting a Podio, right? And using it for a CRM. Like, I don't give an excuse to waste money. Use it for something that's efficient and stuff. So just understand that, especially with an LLC. That's the point of it. You can write things off. Let's kind of break down exactly how these taxes work. So an LLC is taxed personally. It's a limited liability company. So that money gets washed through. So you get liability protection and then it washes through your personal name. S Corp does the same exact thing, except the reason why I like S corporations is because they can be elected to a C corporation pretty quick. Also, there's special deductions with the Tax Jobs and Cuts Act that has not been changed yet, where I'll give you the exact specifications on it, but I believe if you're under a certain amount, which I'll tell you later, you could probably write off almost 20% of your revenue, just deduct on top of all your deductions, which means you could save like 20% on your taxes on additional, which is pretty cool. Then C corporations, they're taxed at 21% currently. I know the current presidential administration has been gunning, like their goal is like 28%. That hasn't come to fruition. Congress is in like a deadlock right now. And with the midterm coming up, I don't see that changing for at least a year or two. But it is set, I'm pretty sure, to bounce back to 35% in the next like decade or something. That Tax Jobs and Cuts Act does go back and revert. So you got to be careful about that. But for most companies, that's probably the best one. Usually when you're in the millions, 21% is so much cheaper than the top tax brackets for LLCs and S corporations. Just so understand that too. All right, let's see here. So let's kind of talk about how taxes work for like brackets. I am embarrassed to admit this, but when I started out in this business, I thought tax brackets meant, let me pop up with the, let's see. Here we go. All right, let's just do the 2022 tax brackets. Let's pop this up. Okay. So this is like the best explanation I can find. So let's pop it up here. So this is a tax bracket right here. I can pop it up and kind of show you. So as you can see here, for a single filer, if you're married, it's different. I used to think like when you made 41,775, all of it's at 12%. And then if I made $1 extra, all that income was now 22%. It was a huge jump. From then I turned about 18 and I learned about taxes, and how it works is it's basically it's bracketed. So it's every dollar above 775 is 22%. So for example, if you make a certain amount, at least 41,760, let's say you make $89,000, you have to pay this much plus 22% of over every dollar over that. And then it's capped off at 37%. And if you're married, it's pretty much this, and then pretty much the same here. So if you're married, it's basically helps you out a little more, which is nice. But that's how those brackets work, basically for your income. So you can see here that if you have to pay 21% flat tax for C corporation, roughly, I would say for most states, above $350,000 is when it starts making sense to have a C corporation. We also understand that's $350K profit. A lot of people can write off rent. A lot of people can write off other things. Remember, get your own tax professional advice. A lot of people take, business trips, stuff like that. So just understand that. All righty. So we got a question. So for example, here I got asked here, where do you find the tax bracket info? I just looked at 2022 federal taxes. I'll go put the link in the YouTube comments really quick so you guys can see this. So go on the YouTube comments and see it, but those are the tax brackets currently for 2022. Just so take a screenshot on that if you want. I'll give you a couple seconds, and then we'll break down how state income taxes work. Definitely not the most fun thing in the world, state income taxes, but break it down. Okay, let's pop this up. Oops. All right, let's pop this up. And so for state taxes, it's like that, except your state will want a cut of that too on top of that. So if it's 35% is what your taxes are, if you're in a state, maybe it's 5% for the state income tax, and you have to pay an additional 5% on top of that to the state. Now, some states, you're allowed to write that off on the federal. So you pay state first. And so this is where, so a state like Texas and Florida, so I'm in Florida right now, I pay $0 in state income tax, which is nice. But remember, I have a C corporation, so I have to pay that. And if you're a C corporation, you actually have to pay that 21% plus a state federal. You don't have to pay a state corporation tax. You don't have to pay a state corporation tax if you're an S corporation or an LLC. Some of these are gradual, so I'll show you the chart here. But each one's a tad different. So these are the top marginal individual for 2021. As you can see here, Pennsylvania is a flat 3%. Virginia, North Carolina, South Carolina, 7%. Florida, 0. Texas is 0. Wyoming, South Dakota, Washington, Nevada, and parts of New Hampshire, and then Tennessee, pretty much a flat 0. percent, which is really nice. So that's kind of cool. That's an advantage of living in that state. Let's say you're like in Oklahoma, that's 5%. Let's say you're in New Mexico, 5.9. Arizona is 8% for the top one. So just understand though, like I'll show you this chart too. You can deduct, you can make standard deductions, which are really nice. And this is like the full chart. So I'll put that in the comments too per state. But Alabama has basically on your cash, most of it's basically 5%. For Alabama, Arizona is pretty gradual, which is kind of nice. Arizona is kind of closer for most people, like 4%-ish. And then it goes from there. You got California, which is pretty much, it goes up pretty high, but just understand that for single filers, most people who make 100K is roughly like 9% or 8 something. And then they have standard deductions, I believe. So that's pretty nice. And then each one's different, you know. So just understand that from your income. I'll just kind of go here and I'll just copy and paste this. And then we'll go over the corporate one. All right, let's pop the next one out here. Let's go see this really quick. Okay. Alrighty, so the next one here. So that's pretty nice. Let's see here. Okay, where are we at? Okay, so we're going to do the federal corporate tax. So the federal, so corporate tax by state. We'll pop that up. Okay, we'll pop this up really quick. Okay. All righty. So let's get the map on this. So Florida is a pain in my butt with them, but I can only say good things about them. So let's see here. Here we go. So these are the state corporate ones you got to pay. So as you see here, we got 5.5%, 7. Texas is like they have a weird like receipt tax on it. 2.5 North Carolina, Pennsylvania is like 10%, Cali's 8. That is how that works. So you got to do your math on yourself and see like which one works the best, which one you want to do, and which one's the cheapest for you. But those are basically how those brackets work. So understand that. So this kind of brings us back to the next question here. You know, what's the best wholesaling tax structure? You know, should it be an LLC, personal name, SC corporation? Which one? What I can tell you right now is this is going to be what I think, and this is just from a 22-year-old, but I do run a 7-figure wholesaling operation, and from my experience, for most people I've seen, if you're making 50K and below in wholesaling income and like profit at the end of the day, I think just a LLC is going to be your best bet. You know, that's side income. You could be working full-time, make 50K. There's no hey, no knock on you. I'm not trying to bust your chops at that, but for that is technically would be for most people a side hustle income. Make it easy, make it simple, do an LLC, be protected, and you should be fine. Once you get above 50K to 300K, I think an S corporation is going to be your best one. You can do that 199A deduction. Please look it up. You could really write off 20% of your revenue, which is really nice if you're under 174,000 as a single filer, which is cool. And then S corporations probably for most people the best. But remember, you have to do what's going to be the best with each income. This is general advice. If I did the state of Alabama or the state of California, it's going to be completely different than if you did like the state of Florida, for example. And then really 300,000, you should really consider it a C corporation. Just understand that the C corporation tax rate changes all the time. I am 99% sure you can go from a C corp to an S corp if you elect it, and then go back and forth with all these every year. So just understand that. But yeah, so that's pretty cool stuff. That's what I like. You can own assets in these corporations. I recommend you can get trusts and stuff. We're not getting in that legal jargon today, but you could get trusts for income properties. Rental should be in separate corporations just for that liability purpose. You don't want to be sued in a wholesaling operation, and then your rental properties can get part of the assets in that, make it separate. Just remember, guys, assignment checks is income. Have that understood. Lawsuits could happen. So let's kind of talk about shell companies for a second for your marketing and wholesaling. And I'm not a tax professional, lawyer, any of the stuff, but let me tell you some of the creative stuff that people do in wholesaling. This is the stuff you go to a $30,000 a year mastermind to learn about tax strategies, so you can go and brag to your friends that you paid $30K for a mastermind because you had this information. Let me tell you the skinny of the stuff nobody talks about behind closed doors for taxes, NAD, stuff like this. A lot of your wholesalers out here are actually going out here and you technically at a large level, you could be considered brokering for wholesaling if you do like an insane amount. So you got to be careful with that. That's why a lot of people do shell companies. One example, let's say for a quick example, if you're wholesaling for that $100,000 deal and you're actively marketing with the same, so if Zach Ginn Home Buyers puts a property on contract for $100K, and then Zach Ginn Home Buyers Facebook page, which is owned by the LLC, markets on Facebook to actually go and try to sell the deal. If the seller finds out, they could get mad and try to, anyone can sue you. I could sue any of my people commenting for emotional damage. It doesn't mean you're going to win. It doesn't mean I'm going to win, but if you have enough money, you can sue anybody, right? So just understand that. But if someone decides to sue you for something, a lot of people do shell companies for their marketing, which means basically Zach Ginn LLC is basically has under contract, but Ginn Corp Marketing LLC decides to market it to a cash buyer. Technically, the marketing is being done from the separate entity, and that entity is not wholesaling. So let's say, for example, if they theoretically, this is all theoretical, let's say there's a law in a state, sooner or later, there's going to be a state there that is going to regulate the way you market. Sooner or later, there might be a state that doesn't like the Texas Longhorns. There might be a state that used to be good in the 80s for football. A state that doesn't have any NFL teams. A state that's known for its fracking. That makes a law out there about how you can't do marketing on the contract if you have a property under contract. I know a lot of people get around laws sooner or later. Or there's sometimes cowboys that do this, that make a marketing company that's a shell to market the deal. And then if a regulator wants to go after somebody, it's the marketing company that did, not the company that had it under contract. You're technically protected from there. Also, the shell companies will do creative, like insane marketing. The point of the shell company is if you sue, Ginn Corp Marketing, that corporation has $0 in its bank account or like $1,000 in the bank account. So if you try to sue for $1 million, you're going to get $1,000 from the shell corporation, which has like $0 in it. A lot of people used to do this RVMs, texting things. So people used to do cold calling straight through, Ginn Marketing LLC. And if you sued me for breaking TCPA or like consumer protection laws for cold calling, technically that shell corporation, which has zero money in its bank account, you're suing a company that has $0 in its bank account. And then you won't get anything from suing technically me for cold calling you. And then usually you have to have a separation of church and state with that. So maybe, Ginn Home Buyers decides to pay them to find leads for them. And that's technically separate. So maybe it's the shell corporation that is being sued and it doesn't have all these rental properties there. I'm telling you, this is all theoretical, but a lot of wholesalers, the big boys, do this. They don't talk about it unless they're behind closed doors in a big mastermind. And this is stuff that I just unveiled the curtain of and just showed you. A lot of them do this. Big Apple does this too. Like a lot of people do shell corporations to pay the lease and taxes. Usually got to pay a pretty good lawyer and tax attorney to be doing this. But that's what they do. And just understand the bigger people in wholesaling understand that too. And you go off of that. So in my opinion, that's how taxes work for wholesaling real estate. Those are kind of the strategies people go around on paying the lease and taxes, reducing their liability to zero. A lot of these shell corporations are in like Wyoming, for example. They're in Nevada. I've seen people do them in like Texas. These are basically corporations where if you get subpoenaed, I believe you actually don't have to actually give it up or give up the address or something like that, or they can't depose. There's certain laws in Wyoming, Nevada. Some people do trust in like Delaware too, where the board of directors is in public. The address is in public, and it's almost impossible to go find a corporation from some of those states. So just understand that. But honestly, that's what I've seen. Let's see here. Yeah, so just understand that, guys. I'm telling you right now, in wholesaling real estate, that's how you pay the lease and taxes. That's what you got to do, and that's the way to do it. So let me know if that helps you. Let me know what questions you have, and I'd love to go answer them. So let's get it going. Let's get some of the tax questions out of there. Start breaking the stuff down. So guys, do me a favor, smash that like button and subscribe if you get any value from the video today. And let's break it down. So Richard says, this is the video we've all been waiting for. That's awesome. I appreciate that. Nick says, boom. 1 Ton Patriot says, what's up? What's up? Let's go. Callie checking in. Awesome. I'm being called the tax man. Excited for this one. Let's get some deals in Minnesota. Jesus says, let's get this bread daily. Woo! Let's get this bread. Love it. Watch out, Zach. There's spaceships flying behind you. Oh, yeah. We're going space theme today. What is up? How's it going? MJJ Smooth Criminal in the house. What is up? So Aaron says, hey, Zach. How you doing, bro? This is the stuff no one wants to hear. Great you're talking about. Appreciate it. Hopefully someone's wants to hear about it. What's up? Aaron says, hey, Zach, what would you start off with, a C or S corporation, which is better protection? Like I've said, starting off an LLC is probably going to be the best one. Aaron says here, what would you say to a seller if you're wholesaling? Would you say you're assigning your interest to another buyer or tell them that you're a cash buyer? I tell my buyers, well, technically I tell my seller that me and my partner are looking to buy a property. And usually it's my partner, which is my cash buyer. That's usually what I say. Aaron says, I saw other wholesalers and investors get sued, but they say for what they say on social media and got reported to the State Board of Realtors and Commission. Oh, yeah, that's another reason why I'm not a realtor. A lot of people don't understand the liability issue with that. Steven says, Zach, hard money lenders do appraisals, though, and the deal is usually subject to that appraisal. Market crashes, appraisal comes in low, which would release the buyer in there with financial contingency. Steven, that's 100% right. The issue is if it's a 17-year-old kid or an 18-year-old kid that doesn't have a hard money proof of funds in place with a letter, or like they can't go to a court or judge and say they even had a hard money, then that's how they get in trouble. When you have a hard money in place, you should be fine. Solo Dolo says, what's up, brother? Been a while, but glad to be here. Just got 2 properties under contract today. Now I need to find a flipper. Oh, snap. Let's get it. Aaron says, are developers good land buyers to sell to? Oh, yeah. Yo, Zach, what is up? Lucifer says, appreciate all the work you've been putting in. Good direction. Awesome. Let's see here. So we're getting asked here from Edgar. Says thoughts on the Denver, Colorado market in Albuquerque, New Mexico. The suburbs of those places work really well. The actual, I would probably steer away from a little more. MJJ Smooth Criminal says, what's the difference between an LLC and a corporation and why you should change them? Basically, they're both going to legally protect you. In my opinion, they're just taxed a different way. You have to pay double taxation for an C corporation. S corporation, you don't, which is kind of cool. So that's the way that they're the biggest difference with them. If you're making more money, it makes sense to make it a legit corporation. Discover Carmel says, what about if I pay myself as my own employee under my LLC company? You don't have to pay yourself as an employee because all that income gets washed off to you. So you're fine. You only pay yourself on a S and a C corporation. This is amazing. Awesome. Terrence says, hey, Zach, how do I find the list of states that require attorneys for closing? You just search attorney states for real estate. Steven says, unrelated, I am back with PropStream, but did not see, let's see here. Did not see a landlord search filter. I make a video how to pull that list. Yeah, I'll just do it right now for you because you are always providing the value, guys. Make sure you smash that like button and subscribe to get the most free content from us. Let's break this down. All righty. Let's go to just a random place. Let's share my screen. All right, so let's just say we're in Harris County, Texas. All I got to do here is, let me show you, is I just go here to filter, quick list. I would go all the way down to tired landlords, and then boom, there you at. Now, if you're looking for cash buyers, I'd click the cash buyers tab, but it's all in freewholesaling.com. So yeah. Olivia, what is up? What is up, Olivia? Plug Me says they're expecting a deal to come through your phone. I would keep that phone on deck as well. LOL. No, not for a deal. I just do get messages throughout the day for things, and just want to make sure we're all good on the business side. But yeah. Gabrielle says, I don't really know tax info. So if I'm under 18 and sign a contract under an LLC, do I pay the tax immediately, annual income accumulated, and does my dad on the taxes? I know a lot of people, now this isn't tax advice, but they do under 18, they jointly get an LLC together because you could do that in most states. And then that LLC gets washed to your personal income, which both of you guys would have to pay. But Gabriel, you would be paying all the taxes because that's just the right thing to do. Do you pay tax on your personal income and the business income? You're asking me. So personally, yes. But let's say, for example, I make $1 million, right? That business will pay that 21% in profit for $1 million. That's after depreciating everything. And then I would pay myself a salary of like 50K or like 100K. That 100K gets personally taxed. And then I already paid the 21% on the $1 million. So I'm fine. Do you need, and then a 5.5% for Florida too. Natalie says, do you need an attorney for a shell corporation or can I just create one by bylaws? That's important. If you're creating a shell corporation, you need to get the right plan in place. I would very much recommend, I'd very much recommend an attorney for that, especially for your state. What's the difference in ideology or method between you and your dad in the wholesale business? We run the same business, so we're pretty much the same. The only difference I would say is I prefer cold calling over him, but at the end of the day, we delegate it. So our visions are pretty much alike. We come from the same school of thought, which I come from the Rick Ginn school of thought for wholesaling. So he kind of developed it. I'm my own way around things. You know, he really never did cold calling before I did, or really virtual wholesaling. He did some virtual wholesaling, but I was the one that basically introduced that in the business. So I introduced him to things, RVMs, SMS text blasting, and those are things I kind of set up. But yeah. Gabriel says, how do you go about pulling list? Also remember telling him about PropStream. That was fun. He's like, I ain't using no dang PropStream for my direct mail. I don't trust it. Only list source, right? And then basically started pulling lists from SMS and cold calling through PropStream. And he's like, okay, you're getting deals from that. We'll try it. And then we did amazing with it. And he's like, fine. Okay. So just fun stuff like that. Nothing too crazy. How do you go about pulling a list from the county clerk? Gabriel, let me know what county you're in. You just search, Miami-Dade County clerk of the court, and then go to public records. It should be there. That's how most people find it. I like the screensaver in the background. Very cool. Awesome. What tax books I recommend? YouTube's the best one by far. I like YouTube better because the laws change. Books are going to stay only current for now. I'm telling you right now, something with like laws and taxes, you got to watch the videos. I'm telling you, boom. Unless you set up a foundation. Curtis, you could do the foundation thing and do a 501c3. That gets into other stuff, but I'm not going to get into that. Let's not go into the 501c3 for shelling of coaching taxes, because I ain't going to talk about that right now. I think people know what I'm talking about. Gabriel says, how do you track wholesale deals for a market to find the ratio between deals and wholesalers? Go to freewholesaling.com, FREE wholesaling.com. I'll put it on the bottom here for you guys. So freewholesaling.com on the bottom. Freewholesaling.com is going to show you the list source hack when you're looking for a virtual market. It'll basically show you how many cash buyers. That's going to be the way to find the deals. And wholesalers are kind of up to you, but it's pretty much easy to understand it. Edgar says, how long do I cold call a list? Have 1,500 prospects, but have recycled and called that list twice already. How many times should I continue to recycle and call? I would give it at least 2 months before I call that list again. I would start pulling all the government lists, code violation, probates, water shutoff, tax delinquencies, pre-foreclosures, probates. Did I mention probates? I think so. And I would go after those lists. And then on top of that, start getting the evictions. And I would start cold calling that list too on top of things, and then start trying for dollars. Tommy says, Zach, plan on pulling lists, government lists, PropStream. Just have to pick my virtual market first. Think in Richmond, but what do you recommend between non-disclosure, disclosure states? I like non-disclosure states personally, just because the seller doesn't get the comps also, which makes it easier for you too on getting a good deal. So there's definitely a pro and a con with them. I'd stick to disclosure states, but you could have a unfair advantage if you have like smszach.com, or listrei.com, where you can actually go out there, use like batch, you code Zach for 50% off, where you can actually get MLS, sold comps, stuff like that. A bit unrelated as well. Armani asks, but, well, do you guys spend heavy marketing bucks on leads under 100K ARVs, or all these leads under 100K mainly JV? Under 100K valuations are mostly JVs. The big marketing bucks are like 300K plus ARVs, because we're trying to make 50, 60K on this. MJJ Smooth Criminal says, Zach, do you pay yourself with owner's draw or other, which is easier? Just a salary, because I have an S corporation. Now, if it's a C corporation, I'd just wash the other income through. Armani says, also, what softwares or system to use for sending deals out to your cash buyers? Basically, we personally call them, because that's the best way, because we have our A list of buyers, and then we might text or email blast the others. Manuel says, favorite business movie? Wolf of Wall Street. Wall Street's a good movie too. Not the sequel. And then the movie 300. I don't care if you don't call it a business movie. It's a sick movie about business, about conquering. Natalie says, do mailing masters send 3 offers? Awesome. Mailingmaster.com is what she's talking about. free mailing course. Is it possible to wholesale by myself, Betty? Oh yeah, 100%. A lot of people do it by themselves, Um, oh my gosh, I've been waiting to catch you on how do I get properties under contract from a minor now. And that's technically not advice I'm giving you, but that's the way people do it. Some people get their guardian to actually sign for them too, and then they all have to pay taxes, but obviously you give your parents like extra money for taxes for it. So yeah. So let's say you make 10K and technically your parents have to pay that 10K in income, but if their tax bracket's like 25%, give them like $4,000 or something, just, for being a pal, and for the extra taxes. I completely understand. Curtis gets it. Maria says, hi, thank you for all you and Rick do. Appreciate you guys so much. Question, should I talk with a lawyer before I start going and getting deals? Can I seek or can I start and seek a lawyer out in a little bit? I'm not going to give you any legal advice here. You don't have to. If my lawyer is talking to me right now, he'll kill me if I don't say this. So I'll say it. Before you do anything, seek legal counsel for anything you do that I say on this YouTube channel. I'm not a CPA, tax attorney, or financial advisor. So that is the official statement. All I can tell you is I know people that do not do that. Maybe some 17-year-old kids that are very handsome maybe did not do that. And I know other people that didn't do that starting out. But I have to give you the official lawyer answer for no liability on my behalf. That's funny. Iger says the gurus ain't slick with the 501c3. I definitely know what you're talking about. And maybe they get called out. They change it to a 501c, a 501c6, but only when you call them out. People do that. They think they can pull fast one on people. I don't know why, but let's not talk about that. Plug Me Radio says, Zach, I called the clerk of the court in Tennessee. I forgot the name off the town for now. I was trying to pull code violation list. I was told I need the property's address in your list available. Speak to the manager. That will help you out a lot. Let me know if you spoke to the manager. It seems like called the clerk office. Going in person is the best, but I know you're in New York City, so I'd have to get in front of the manager. So yeah. Okay, you guys are so funny. Roshan, what is up? Yo, what's up, Zach? I saw your video about what if a seller finds if you're a wholesaler. So is it bad you introduce yourself as a wholesaler to the seller? Yes, that is not a good idea. I do not recommend it. Do not be doing that. You have a buyer and they are your partner, and that's what I'd recommend. Facebook user says, can I wholesale a property without going through the closing company? Depends on your state. Should you use a local phone number in the market you're in? Gabriel, yes, you should. That background's cool. Appreciate that. This is we're in space, we're in the industrial fleet right here. Or in the future of wholesaling real estate where there's no gurus or no course sales. So that's where we're at. That this is the cool part, right? This is what everyone loves. This is Sparta. Love it. Victor says, can I wholesale a property in Florida without going through a closing company? Yes, you can. You could technically use an attorney that has a title company. I don't know what you mean by closing company. If title, then sure. But it gets a lot harder to do. You could technically just do a quitclaim deed, right? Without title, but then you want title insurance. What's up? How are you? Armani says, what is up, Armani? How are you? Says, how many leads do you guys market to per month for your niche lists? I love government business, but how many are those to keep the lead flow? What would you recommend? Less than 5,000, I'd say, for us, but that we're pulling a lot of counties, dude. You'll be closer probably to 500 if you actually pull them yourself. That's what I could guess. Edgar says, is the New Mexico market too saturated, or would you recommend going in the suburbs surrounding? I would do the suburbs and then all of New Mexico. I think you'd be fine. Great. Thanks, Zach. I will do that and ask for the manager. Awesome. Gabriel says, can I do the assignment contract myself with a lawyer using your contract layout, or should I hire a company to go with someone? I would use my assignment of contract and then go to the title company and see if that's something they'll accept. Does wholesaling work in rural areas? Yes, it does. Maria says, appreciate it, Ha. Totally understand. One more question. When virtual wholesaling, what do you guys do for a contractor? Do you just ask the buyer to bring one, or do you ask the seller for pics? For virtual, ask the seller for pics, or I'd bring someone just to take pictures. I don't really need a contractor to go through and look at the pictures of the property. Aaron says, you'll find them a kind Xerxes. Okay, we're not getting into that. But the gurus are like that. They're like, I am a kind ruler. You just bend your knee to me and bow down to me and say I'm the greatest thing ever. And, I'll promote you in your YouTube channel. I don't care. I took that spear and, the spear hit the face and they're like, and then you see that they're human. They're no immortal beings. I love that movie so much. And then you kind of show that the ruler ain't as cool as you think. I gotta be Leonidas with my spear and just whoosh, and then throw it, show these gurus what's up. Curtis Young says, how do you wholesale in the state of Ohio if you don't have a real estate license? You put a property under contract, then you sell it. You're fine. You can wholesale in Ohio without a license currently. Thanks for all the help. I appreciate you and your dad giving back so much. Of course, Armani, Aaron, already awesome. So guys, that's it. That is actually how taxes work for wholesaling real estate. You guys have any questions, let me know. Looks like we're out of questions here. So no big deal. I appreciate it, guys. If you get any value from me, please smash that like button and subscribe, and we'll see you guys soon. Check it out, freewholesaling.com, and see you guys soon. Cue the video. Have a blessed one, guys. See you tomorrow. Me and Rick, we got a big live tomorrow about probates. I'm pretty excited about it. So let's get it going. Thanks, guys. Oh, wait, that's the wrong one. Hey guys, Zach Ginn here from Flip with Rick, and after helping tens of thousands of people get started in wholesaling real estate and helping so many people out go from $0 to $100,000 in wholesaling real estate, I'm super excited to announce my new wholesaling mastery course. This wholesaling mastery course will have everything step by step on the whole entire wholesaling processes. I'm going to give you real deal examples. I'm going to hold your hand throughout the whole wholesaling process. This course will give you everything you need to know to make up to $100,000 to over $1 million per year in wholesaling real estate profits. Most real estate gurus out there will charge you around $5,000 for a course like this. But today, if you click on the link, you'll get my wholesaling mastery course for the low price of
sellout.
What?
What are you doing? What are you doing?
What do you mean?
I knew you would do this. I knew you were going to go the course route with the guru. It goes against everything we've preached from day one. Don't be a sellout.
The course is free.
What?
The course is free. I'm giving it for free.
Oh, I apologize. Carry on.
Jeez. Okay. Sorry about that, guys. Yeah, duh. Do you think I'm going to go sell out as like a regular guru selling you a course? I'm not trying to make money off of you guys. Guys, over here, all you got to do is click there to just sign up. No gimmicks, nothing. Absolutely for free. It's a free wholesaling course. Literally, I've seen every single wholesaling course. I have access to all the 10,000 mentorships. Guys, I literally copied them step by step. I literally have an entire course set out just for you for wholesaling real estate. Click on that and let's get